Grouping is a great tool, and before I learned about grouping, I used to spend a lot of time adding lots of formulas. But since I discovered grouping, I realized how quick and easy this was, and how much less time you need to spend by just utilizing pivot table's grouping feature. So the first custom grouping we want to do is, we see that we have 5 countries here. Now, if you want to look at sales by continent, you see that there's no information related to the continent in the original data. You do have the countries, but there is no mapping of continents to the countries. You can actually create a custom mapping or custom grouping. How you will do that is you select the countries, like for example, the first one we can clearly see is North America, and we know USA and Canada are part of North America. So you click on Canada, and then you press Control key and also click on USA, and then you right click on group, and you see that Excel has created a new group for the 2 countries already. Now this group by default is called group 1, but you can change its name by clicking on group 1 cell and just typing North America. So there you go, you have your North American continent. Now you can see another continent in there. You see Germany and Italy. These 2 can be combined into Europe as the continent. So again, you right click after selecting the 2 and click on group, and you see you have the second group, and you can call it Europe, South America. So there you go. Now what you will notice here in the rows section is that there is another field that has been created by Excel, which is currently called country 2. But just in case you want to be able to remember it correctly, you click on this drop down arrow and click on field settings and change the name to continent. You click OK, and now you know that you see the sales by continent. So in this way, you can create custom grouping without the need to go into the data set and making any change. This is very helpful. Now you can actually see sales only by continent as well by removing the country field back to filter, or you can also take it out completely. You now see sales by continent. So the tip that I'm going to share now is assigning data into data ranges or buckets. Before I knew this trick, I used to spend a lot of time creating if formulas to create a data range, but since I know this grouping trick, it has saved a lot of time, and you can do so many things with this option, which you will see in a moment. So again, let's quickly create a pivot table. It's very quick. And now in this pivot table, what we want to do is we want to create buckets or ranges of sales dollar values, right? So let me bring sales in the rows section. Usually we bring values to the value section of the pivot table, but this trick works if you bring values to the rows section. So we want to see data ranges for sales. So I'm gonna drop the sales field into the rows section, and you can see here they're all the sales, all the different sales that we had on each day. They are listed now, and you can see that they started from 0.44, so really less than $1, all the way up to $22,638 being our biggest sale in a day, right? So if I leave it as it is, now I'm going to do custom grouping. So just right click anywhere on the data and then click on group, and Excel automatically proposes you the ranges. It starts with the minimum, ends at the maximum, and then this shows what are the ranges that you want to use, what is the size of the bucket. So just to make it simple, we start with 0 instead of 0.44, and let's say we end at 25,000, which is higher than the maximum value, and the buckets or ranges we want to see is a cap of 5,000 each. So as soon as you click OK, you see that Excel has created these ranges. So the first range being any sales between 0 to 5,000, the next one from 5 to 10, and all the way till 25,000. What you can do now is you can bring sales again in the value section. And here, first of all, what Excel is doing is, you can see it says count of sales. So you can see the number of sales in each of the buckets. So the first one, 0 to 5,000, is your biggest bucket as far as number of sales transactions is concerned. 9,975 transactions out of a total of 9,994. But this is just the count of transactions. You can also see the value. So again, you bring sales into the value section, and then automatically again it has picked up count, but you can change it by clicking the arrow, drop down arrow here, and click on value field settings, and instead of count you click on sum and click OK. Now you have the values, so you can see that in the range of 0 to 5,000 you have $2.1 million of sales, right? And again, this is the highest bucket, so most of your sales are happening within this range, within the range of 0 to 5,000. Now you can do some very interesting things here as well, like if you want to see the percentage of total, so you can right click on the count here, and you can click on show value as percentage of column total, and it changes all the numbers into percentage of column total. So you can see almost 99.8% of your sales are within 0 to 5,000 ranges. Similarly, you can do the same thing for the values. So click on the number, right click on the number, click on show value as percentage of column total. And you can say in terms of sales dollar values, you have about 92% of your sales within that range. Maybe you look at it and you say, maybe I need smaller ranges because a lot of the transactions are within the 0 to 5,000 range. So maybe I need smaller ranges. You can change that by right clicking on the range, click on group again, and just simply change this cell. And let's reduce it to 2,000. So we want buckets of 2,000 each, and you click OK, and automatically it changes, right? So you see that although in terms of number of transactions, you're still around about 98 to 99%, but your sales dollar value, there is a shift between 0 to 2,000 and 2,000 to 4,000. So 11% or 12% of your sales are now within the 2,000 to 4,000 range. So this is a great tool, and you see how quickly this was done. Usually, I mean, if you don't know this trick in Excel, how to do this grouping in Excel, you would probably create a lot of if formulas, and you will have to set up a separate summary where you will be doing this exercise. But by doing this so quickly, you can really analyze the data and look at the ranges within the data. This third tip is about grouping of dates. So now we bring ship date into our rows section, and by default, the first time you do it, Excel will automatically group it into years, and in this case quarters and months, right? But if you don't want to do that, if you want Excel to just bring in dates, you can just press Ctrl Z, and the format will change back to original dates that are in the data set. Now you can do your own grouping. Again, similar to the previous grouping options we saw, you can right click on the data, click on group, and the options it gives you is there are multiple options. You can group it by seconds, minutes, hours, days, months, quarters, and years. So let's say you are more interested in just months and years, so you can select multiple options. You can select months and years, and then click on OK. So now you see that the data is grouped by year and respective month. And then now you can bring in values. So for example, if you want to bring sales dollars again, and then you have sales by month and by year. And again, you can filter here also. So for example, if you want to filter on a certain number of years only, click on on any cell which shows the year, and then click on this filter here, and you can see all the years are available. Let's say you're only interested in 2017 and 2018, and you have selected them and click OK. So you have 2017 and 2018, and it looks like the data only has the month of January for the year 2018. But anyway, your filter is on, and you can filter on the information you need. Then after you have done that, you can actually shift it to the column section as well. So you move it here, and you can see now you see a nice trend of the months. So you have year here, and then monthly sales along the columns. The next step is about calculations within the pivot table. So we come back to our original pivot table, if you recall, where we grouped sales value into continents, so South America, North America, and Europe. Now, if you look at the data, you have gross sales information. You also have net sales, standard cost, and standard margin. but what you do not have is standard margin percentage in the original data, right? And since you have grouped information here, it's not easy to just create a calculation on the right side of the original data and then calculate your standard margin percentage, because at this level, you want to be able to see your standard margin percentage calculation, for example, by whatever grouping you choose here. So let's bring the information that we have in the data sets for reference, and then we will create a calculation. So let's get rid of gross sales for the time being. So click and remove. Just bring net sales, standard margin. And you can see again the grouping still holds, but what we want to calculate is the standard margin percentage. So you click on any cell in the pivot table, and then you go to pivot table analyze. If you are using a previous version of Excel, it would probably just say analyze. You click on analyze and you will see an option here called fields, items, and sets. Click on that and then click on calculate field. And this gives you an option to create a new field based on your calculation. So let's call this standard margin percentage. And here you will use the formula. So the formula would be equal to, and we will look at our fields within the pivot table. It will be your standard margin in dollars. You can double click it to bring it here. Divide by your net sales. Again, double click on net sales and it brings it here into the formula. And then all you need to do is click on add, and you will see that a new field has been added into your pivot table, standard margin percentage, and then you click OK, and your calculation is there. Now you just need to change the formatting a little bit because this is in percentage. So you click on percentage and you see you have your standard margin percentage available. You can also check if you like. Your standard margin percentage should be your standard margin divided by your net sales. And you can see the calculation works fine, right? Now the beauty is, as soon as you change the grouping, this field will auto calculate as well. So for example, if you decide that you want to go back to the countries and not continents, or maybe you want to keep both of them, continents and countries, you can see that by adding those, you can still see the original calculations, right? So with your grouping, you can still use the calculated fields, and the calculated fields will update based on whatever grouping you have chosen. This is extremely useful and very powerful in your analysis. This next step is a big one. It helped me a lot through my career. And this is where you have two different reports and you want to combine them and analyze them together. And a classic example would be you have your actual data and you have your budget data. But the problem is that the format of the two reports is different, and not all the information that you have in your actual report is available in your budget data. This is very common because often when we are budgeting, maybe we do not have all the detail at the time of creating the budget. It's done on a higher level, but then when you have your actual reports from the system, you have much more data. But how do you combine the two and analyze the information as much as you can? So let's see what is the difference between the two data sets. If you look at the columns, the sequence of the columns is different. For example, budget starts with country and calendar month, and actual starts with customer name, channel, product. And then also in the budget data, you do not have your gross sales and discounts and deductions. If you look at the budget data set, it's not available. You start with net sales and then you have standard costs and standard margin, right? So how do you combine these two reports and analyze them together? Because you want to see performance, let's say by customer and product between budget and actual, right? What you would do is go into your actual data set, go all the way till the end. And then before we do that, let's freeze cells so that we can see the column titles. So you click here, I think just below your column titles, and then click on view, freeze spans, and click on freeze spans. Now as you scroll down, you can still see the titles above, right? So first of all, customer name. Do you have customer name in your budget data? Yes, you can copy the customer name from your budget to your actual data. So let's start copying the information that we can. So we go all the way to the end of the actual data set and we start adding the information from our budget data information. right? Similarly, we have product. So we copy the product. Make sure you copy it under the product column so that your analysis works. And similarly, we will copy the rest of the data that is available. So now I have copied all the information from the budget data set that was available. As you can see, we did not have gross sales and discounts and deductions. So I just leave that empty, but everything else has been copied. But what you need to do now, this is the critical step, is that you will add another column to the right side of the data, and let's call it scenario. Okay. And then you will assign actual and budget scenarios based on the original data sets, right? So let's go. We started our budget data from row number 734. So you know everything from row 734 and under is budget. Okay, that is budget, and everything above that is actual. So we enter actual and copy it. So now in this column K, you have basically two pieces of information, whether this record is actual data or is it budget data. And now you're ready to go. You're ready to create a pivot table. So you just select all of the data again by pressing Ctrl A, click on Insert Pivot Table, and you have your new pivot table set up. So the first thing you can do, you can simply click on this new field that you created, scenario, and bring it to your column sections. Okay, and then now you can analyze this whichever way you want, right? So for example, if you want to analyze by customer name, let's bring the customer names to our row section, and we want to see net sales. So here you can quickly see, you can see a comparison of your net sales between customer and between actual and budget. So if you change the formatting, in this case you do not need a grand total because adding up actual and budget would not make sense. So we click on design, grand totals, and on for columns only. So you can see now a very nice comparison of actual versus budget. The great thing is that now you can analyze this information in whatever way you want. So for example, if you want to bring the channel and segment here, that will work too, right? The only thing you have to be careful about is the information that you did not add or that was missing, which was gross sales and discounts and deductions. That will be misleading if you try to compare that. So for example, if we remove net sales and we bring back gross sales, you see that there's nothing in the budget column. But anyway, this is still a very powerful tool because you can still analyze a lot of information. You can analyze your net sales, you can analyze your standard margin, and you can do a very quick comparison of your performance, actual performance versus budget. So this is a great tip. It helps you a lot, and I've used it in many different areas. I mean, it's a little bit about thinking outside the box. You can use it for reconciling bank statements. I've also used this technique to create unbilled to billed report in companies where there is a lot of push for making sure that billing is done on time. This would be a great report to help you. In this next step, we will look at slicers. Pivot table slicers are great for connecting multiple pivot tables and applying the same filter on multiple pivot tables. So for example, now I have a pivot table of sales by segment, which is work and life. So you can see I have sales margin, sales and margin information here. And here I have a second pivot table, which is your monthly sales by customer and segment. And both of these pivot tables are currently filtered on actual data. So if I apply a slicer, if I insert a slicer here, let's click on pivot table analyze and click on insert slicer. And it shows you the various options you can apply a slicer on. Now let's say we want to apply a slicer on the scenario. So we want to be able to select either actual or budget scenario, and we want the reports, the pivot table reports, to change with that. So you check on the scenario field and click OK, and a slicer appears for you. And now as you can see, currently actual is selected, so all of this information that you see on the screen is based on actual results. But if you want to change it to budget, all you have to do is just click budget. And as soon as you do that, the information here changes, but this pivot table does not change because these two pivot tables are not connected yet. So the slicer is currently only applied on this pivot table. Let's put it back to actual for a moment, and now let's connect the two pivot tables. So to connect the pivot tables, you stay on the slicer screen, or you stay on the slicer menu, and you will see something called report connections. And when you click this report connections, you see here that currently you have a check on pivot table 8, which is this pivot table. And if you check on pivot table 7 as well, then these two pivot tables will be connected. So if I click OK, and now if I click on budget, you see that both of these pivot tables have changed, right? And if you can see that the filter automatically changed to budget here, and you see budget here as well. And if you click back to actual, then again, both of these pivot tables change. So you can apply it to more than two pivot tables. You can apply it to many pivot tables. Dashboards that are created in Excel are usually created by using slicers. So slicers are a great tool as well when you want to filter information, but you want multiple pivot table reports to update based on your slicers. As mentioned earlier, pivot tables are a great tool for data analysis and reporting, and a little time spent on learning the different options and features available in pivot tables can save you a lot of time and can help you immensely in your journey to data analysis and reporting. Hope this video helped you. Make sure you click like and subscribe to my channel for more accounting and finance related tips, tutorials, and videos. Thank you and bye for now.